talk about the return to the meme stock trade this week, and it seems to have meant a lot of business for trading platforms, including Robinhood. Joining us right now is Robinhood's Chief Brokerage Officer, Steve Quirk. Good morning to you.
Good morning.
We're all trying to understand what you think actually happened this week, why this happened, and really how much of this was driven by retail versus institutions.
Yeah, if we just look at the numbers, the last time the meme stocks, had their rally, we're probably doing in our customer base, we're probably doing about a quarter of the volume that we were at that point in time. So we're not seeing.
Which tells you what?
Well, it tells me, there's a couple things that it tells me. Number one, if you think about all the people that came into the market during that period, I mean, a huge number of new market participants entered that at that point in time. They've grown up. We can see that in our data. 80% of those customers are still with us, but now they're opening retirement accounts. They're looking for yield. They're opening the credit card to get 3%. They've moved on with their life, and they're sort of rounding out their investing experience. In this instance, we did see our volume spike. So there still is interest in this. There's interest in movement and volatility. That's really what it is. But, our two biggest days were not anything related to this. They were around NVIDIA earnings and NVIDIA news.
Do you look at this as a positive thing or a negative thing for the marketplace? When you see stocks move like this, I mean, we were talking about sort of the integrity of the market the other day with Jay Clayton, former head of the SEC.
I watched it.
And I think there is genuine concern that when things like this happen and it's not really moving for fundamental reasons, that it undermines that integrity.
Yeah, I think that, by the way, there's a good segment, and I watched it. Here, he made a couple points which I thought were really interesting. The number of tradable instruments is down pretty dramatically, right? At the same time, we're at the highest participation rate in the U.S. for households. So now you have more participants with fewer instruments, right? That's naturally going to lead to some concentration in areas. I would also say, even the number of people that came into the marketplace, during COVID and the GameStop era, those people are still in the marketplace. The majority of them are still in the marketplace, and now they're investing in a very different way. So the question always becomes, hey, we all think it's beneficial for every American to participate in the greatest wealth creation vehicle in the world. How they get there, if it's through this.
Right, but if it's through speculation and they lose, that's a problem.
It is a big problem.
Sometimes they leave; they don't stay.
Yeah.
So when you see a GameStop move the way it does, or by the way, Trump Media's company, that's a top 10 stock.
It's one of the top 10. I think it's number 10. Yes.
Number 10 on your on Robinhood. I don't know what you think of that. Do you say to yourself that this seems like a completely plausible valuation, or do you say this is insane? And the folks, it's hard to tell your clients that they're not smart, but are they making a big mistake?
Here's the way I'd say it. If you think, we can watch what they're doing with their portfolios. And as I said, 80% of those people that came into the marketplace are still with us. Over 2/3 of the people that are even participating in GameStop, AMC, DJT, they're long-term investors. So they're taking a small portion of their portfolio and saying, this is interesting. It's what everybody's talking about.
And they think of it as a trade.
They think of it as a trade. It's not an investment. It's not something that they might, because you can look at, you looked at our RICs. You can see AMC and GameStop are not moving to the top of that.
Right.
This is a trade for them and something interesting, but their core portfolio is going to remain, the most popular names that sit on that.
No, when you said that they're acting differently this time, it's like, they got about 1/10 of the money they had last time if they stayed in some of those names, right? I mean,
I think, but you have to make the assumption that's the only thing they were doing.
Right, they were doing other things.
Yeah.
But there's been a lot of pain in the meme stocks still this week.
There has been, yeah.